Hi, this is Marie from Legacy Publishing, and welcome to the latest edition of Chuck Hughes' video newsletter. In our previous video, we discussed the cash dividend strategy. I can see from Chuck's daily trading log that he is still very active selling option premium to generate cash dividends. Today, we are going to discuss the best way to implement the cash dividend strategy, given the current market conditions. Chuck, can you tell us which strategies you are currently trading in your personal trading accounts?
Marie, the recent market volatility can present challenges to traders who use money management rules to exit losing trades before they develop into large losses. I usually exit a stock trade if the stock declines 7 to 10% below my entry price. This simple rule allows me to avoid big losses that can devastate a trading program. The recent bear market in stocks demonstrated the importance of limiting your downside risk when you own stocks. Now, the problem today is that a stock can easily decline 10 to 15% in one day. This type of volatility could make the timing of your stock purchase very difficult. This table lists some of the stocks that I currently own. These stocks are on a buy signal based on my trend following systems and my trend confirmation indicators. The table lists recent one-day declines in these stocks that I own. Following a money management discipline of cutting losses can prove difficult in these type of market conditions. You could buy a stock and have to exit the very next day if it suffers one of these type of one-day price declines. But when you buy a stock and sell a call option, you can receive up to a 20 to 30% cash dividend. This cash dividend reduces the cost basis of the stock and allows me to hold on to a stock through volatile price moves. In adapting to the current volatile markets, I found that the strategies that work best are the in-the-money or at-the-money buy rights and the in-the-money option spreads. These buy rights and option spreads can provide good returns and at the same time provide substantial downside protection that allows you to maintain a trade and profit even though the underlying stock declines 10 to 15% or even 20%.
Chuck, can you show us recent examples of buy right and option spread trades so our viewers can get an idea of the recent profit performance?
Yes, Marie. This brokerage account profit loss report lists my current buy right and option spread trades. Now, there was enough downside protection in this portfolio that I have not had to exit any trades since this portfolio was established in mid-March, using my money management guidelines of limiting losses. The report shows that all of my buy right and option spread trades are currently profitable.
Chuck, can you show us an example of one of the buy right trades in this portfolio so viewers can get an understanding of the profit potential and downside protection available from buy right trades?
Yes, we can take a look at one of the buy right trades in this portfolio. My brokerage account trade confirmation shows that I bought 1,500 shares of Wells Fargo bank stock at $16.90 and sold 15 of the Wells Fargo July 17.5 call options at 3.60 points. This created a buy right trade that expires in 4 months. This buy right analysis displays the profit or loss potential for buying Wells Fargo stock at $16.90 and selling the 17.5 strike call option for 360 points. The analysis displays the profit potential for this buy right trade, assuming various price changes for Wells Fargo stock at option expiration from a 10% increase in price to a 20% decline in price. If Wells Fargo stock declines 20% in price to $13.52, the analysis shows this trade would still realize a small 1.7% profit at option expiration. If Wells Fargo stock remains flat at 1690, this buy right trade would realize a 27% return. And if Wells Fargo stock increases 5% or more, this buy right trade would realize a 31% return. This analysis demonstrates that this buy right trade can produce a profit if Wells Fargo stock is up, flat, or even down 20% at option expiration. This trade has a much higher probability of being profitable in a volatile market than a stock purchase.
Chuck, can you show us an example of one of the option spread trades in this portfolio so viewers can get an understanding of the profit potential and downside protection available from in-the-money option spread trades?
Yes, let's take a look at one of the option spread trades in this portfolio. My brokerage account trade confirmation shows that I bought 15 of the Goldman Sachs July 65 calls, symbol GSGM, at $47.99, and sold 15 of the Goldman Sachs July 95 calls, symbol GSGS, at $25.69. This created an in-the-money call option spread. These options expire in 4 months. With Goldman Sachs stock trading at 113, the 65 and 95 calls would be considered in-the-money calls. This call option spread analysis displays the profit potential for buying the Goldman Sachs 65 strike call at $47.99 and selling the 95 strike call for $25.69 points. The analysis displays the profit potential for this option spread trade, assuming various price changes for Goldman Sachs stock at option expiration from a 10% increase in price to a 20% decline in price. If Goldman Sachs stock declines 20% in price to $90.69, the spread analysis shows this trade would still realize a 15% profit at option expiration. Now, if Goldman Sachs stock remains flat at $13.36 or increases in price, this call option spread would realize a 34% return.
Chuck, it appears from your recent results that the buy right and option spread strategies provide good returns with low risk and are perfect for current market conditions.
Yes, Marie, we can see from these analyses that the buy right and call option spread strategies can provide substantial returns if a stock is up, flat, or down at option expiration. They provide substantial downside protection, and they can help you avoid having to sell your position using money management rules during volatile markets. These strategies incur less risk than owning a stock or call options, and the strategies can provide substantial cash dividends with the sale of covered options.
Chuck, if viewers are interested in obtaining the calculators that perform the buy right and option spread analyses, who should they contact?
Marie, these calculators are available through membership in my Wealth Creation Alliance. For more information on my Wealth Creation Alliance, log on to chuckhugheswca.com or call 800-624-5352 for more information.
I hope our viewers have gained some insight into these valuable trading tools. I want to thank everyone for viewing, but before we leave, can you tell us, Chuck, how have these strategies performed in the past?
Marie, I have been actively trading these strategies over the past several years. My brokerage account profit-loss reports I am displaying now show over $811,000 in profits trading the option spread strategy. 85 of the 87 spread trades are profitable, resulting in 98% winning trades.